Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good weekend, all. Ira Epstein of Linn and Associates with your financial market update for this Friday. And this is your weekend version of these updates. And it is October 13th, 2017. It's about 3:18 p.m. So what we've got is this is where the settlement prices will go on. At 3:30, the markets will reopen, but it won't matter. These are where the stock settlements will come in. Currencies will be in this neighborhood as well. And as you can see, you're also looking at metals in a fairly strong day. So what we had today, finishing it all off, was we were looking to see the core inflation data that we were getting. What did wages look like? They're not going up, at least not in today's reports. When we looked at the producer price indexes, when we looked at what consumers are paying this week, when we look at everything X energy with energy, the simple fact is, while the Fed wants to raise interest rates, and there's not going to be much stopping them, they still have two reports ahead of them, remember. This particular report did not give them the wherewithal to say, oh, the inflation is back. If anything, it said, no, it's not back. And you had a good rally off of it in the bonds and the notes to prove the point. The president also today decertified the Iranian deal, which means it goes back to Congress. They have to debate it, try to renegotiate it, get with our allies and so on. He's putting sanctions, further ones, on the Iranian National Guard, but he did not call them a terrorist organization. Had he done that, I think the whole deal with Iran would have fallen apart. It still doesn't mean we're not going to hear from the Iranians. It doesn't mean that with all that's going on, the North Koreans are going in any way. But for the moment, it's what it is, and the stock market blew it off as it does so often. It just continues to move in one direction higher, and we're just sort of chopping back and forth in the foreign currency market at this point. Energy markets got a good lift today as we were looking at numbers out of China, and they showed in September another monster rally in the crude oil. I think it was up 12% increase in what they're bringing in. Plus now there's rumors that the Saudis are considering shelving their IPO ideas, and the whisper out there is that China might want to be a buyer for that amount. Hard to tell, but boy, it would make a lot of sense. They'd be locking up an energy source for themselves. Not saying it'll happen, but that's what the day's events were. When we go to the monthly chart of the Dow, you can see you're still very much in this channel line that's going up, and this is the year 2017, and I think you can see it has just been pretty much a one-sided event. It's right to the upside. When you go to a weekly area chart of closes, you're going to look at the highest close that you've had, period. Now, for the week, it's not dramatically higher on the E-mini S&P. It's up 7.5, but it's just been a one ride to the upside. As we come into the weekly bar chart, I've just put on the 18-week moving average with it. You can see this trend line, and the market seems to be holding that. And when the swing lines are put on, and remember what swing lines are. I created a study that measures in looking at a previous bar. Do you have a higher high day, a lower low day, an inside day, an outside day up, or an outside day down? Then I assign a rule to each of those days, and what it does is it creates this dark line, and with it I'm looking to see, is there a pattern there that we can call a trend? I define an uptrend as having higher lows and higher highs. You've got that. I then say that in order to break the trend, you got to take out in an uptrend the most recent low. We've got that at 24.85. And then I can define risk associated with the trend, because from where you're closing today to get under that number, you take the difference in points, and that gives you the value as to how much risk there is, at least at the current price, to break that piece of what we define as a swing line trend. I filter the swing line with moving averages, and I teach all this, by the way, in my charting course, that if you go to our website at www.iraepstein.com, it really lays it out. And believe me, in these videos, you are not getting the course. You're not getting everything that I do by a long shot. That's my design. But as you can see, you're over the 18-week moving average of closes. By accident, I have the word day. That is my typo on this. I didn't realize I did that, and I'll fix that. And this is the 18-week. Bollinger Bands are what? Bollinger Bands are an algorithm designed to keep the market trading within the bands 95% of the time. And if you take a look, it does a nice job. The theory is when the market gets down to the lower band, think of it as support, the upper band as resistance. That doesn't mean the market can't keep moving. It's sort of like one of my other rules. I have another rule that I teach in the course that what you're looking to do is when a market is trading over, let's say, an 18-week moving average of closes, you're not looking to be short. You're looking for reasons and ways to get long in that market because the bias is up and the trend is up as long as you're there. That's what you've got going. The problem is that you've now got two closes, this week's close, and if I'm correct, was it last week? You closed 25.45. And you were over the Bollinger Band of 25.29. What about the week before? The week before, the market closed at 25.16 over the upper Bollinger Band. The week before that, you closed at 24.9950 under the Bollinger Band. So we've had 3 weeks in a row, including this week, where the weekly close has been over the upper Bollinger Band. Now, the theory of Bollinger Bands is you won't stay more than 5% of the time out above or below the band. I've created a rule of thumb that I've gone back and I'm very comfortable with. Doesn't mean it's right, it's what I'm comfortable with. I assign each one of the times that you're out of the band one of those 5 percentage points. I am now prepared to say that the odds of the market closing over that Bollinger Band next week are 2%, 98% against it. That doesn't mean you have to have a big break. It just means I don't think the price will be over that, which favors the market, what? Possibly having a bit of a slippage in it. In terms of momentum, the market is going on to the upside. Now, on weekly charts, I don't look at it the way I do on daily. Is the market overbought? Is it embedded? What's it doing? I just use it as momentum, and momentum is still very much to the upside. So the market's ahead of itself because it's over the upper Bollinger Band. The trend is up, the bias is up, and momentum is up. On the NASDAQ, we're up to the upper Bollinger Band, fighting a battle there. Momentum is up. Unlike the other indices, you have a pattern here of a lower low and a higher high. So it's not a real trend, but the bias. Notice this 18-week average. You haven't closed under it. So we've had great upside bias since a year ago, December, in this market. If we come on to the E-mini S&P, look at how the 18-week average is held. These are important things because as one looks to be a trader to get short, long, you have to understand what sometimes your longer-term trends and your shorter trends are. This is in an uptrend, higher lows, higher highs. Now, today with the 22,829, you're over the upper Bollinger Band of 22,762. Last week, you closed the day at 22,694 over the upper Bollinger Band of 22,589, and the week before at 22,346, you were under the Bollinger Band. So 2 weeks in a row over, 3% chance of the market this week staying above that band, momentum up, bias up, trend up. When I come to the Russell, this market is now how many weeks over the upper Bollinger Band? It's going to finish out at 1506.30. The Bollinger Band is 1508.67. It's already back under it. And you had in this market an up week, and another week down. And this is what the point of a Bollinger Band is. That's all that it is. It's telling you not to reach up and buy that. Doesn't mean you can't go higher. It's that the market, the odds of it moving to the right-hand side of the band are strong. Sometimes that also gets you back down to key reversal points or back to that 18-week moving average. Notice this indice is different than we've had in the others. They're not getting to that 18-week. They fall to it. They don't really get under it. This one, did. In fact, it got to the lower Bollinger Band. So important to understand, momentum is up in a minor pullback. The VIX, which measures, and this is the daily chart of that, let's call it the risk factors. Let's call it how the market perceives risk on, risk off in many ways. Just going sideways here. It's all it can do. It can't lift itself, and it's too low to be breaking. It's sort of, right now, in my opinion, not telling you much of anything. In the 10-year note, the market went from an upper Bollinger Band to a lower one. What's going on? We've been looking for that inflation data. We didn't quite get it. You had one rally where you got up to the 100-day average and the 18. Now remember, the higher the market goes, what happens? The real fact is lower interest rates. The lower futures go, then you get a bounce. The 2-year note got up to around 234. It's back to 228 in a fraction. Resistance in the market, 126. The market is now in an area where it's no longer pointing on momentum to the downside. Wouldn't surprise me if it tries to get back to the 18-week average and just hang around there. In the dollar index, you had momentum locked in. Then the market starts a pattern of trying to climb up, and it does it, and you lose the downside momentum. See how this number got and closed back over 20. Well, when that happens, price often, not always, tries to get back to that 18-week moving average to reconstitute itself. That's what I think is going on right there. The opposite happened in the euro currency. You didn't quite get to that 18-week average, but you certainly made a run for it so far. And it would not surprise me if it gets to it, okay? I'd still expect that to be a possibility. It's what happened in the in the Aussie dollar when it lost it. It fell, and you can see right through here. You lost the embedded reading, or all the momentum over 80 turned down. The market started coming down. The objective was the 18-week average for neutrality, and that's what the market has done so far. It's gone back to a neutral stance in it. Canadian dollar. The Canadian dollar has tried an uptrend. Frankly, if it gets under last week's low of 79.89 and a half, I think it's 79.39 and a half. That would be under the 18-week average. That could set off a decline in this market. The potential could be down here. Support early on, the 18-week average at 79.43, and that's still slightly above that break low. But take out that break low, and this chart picture changes very quickly. In the Japanese yen, you have a pattern of a higher high and lower low, stuck within narrow Bollinger Bands. Always pay attention to what Bollinger Bands are doing. Are they trending? In other words, they're moving up, down. But when you get this, it's how big moves eventually develop. Think of this as a pipe, and there's a spring in it winding up. Eventually, it comes out of that spring. Go back on your own charts. Don't take my word. Look to see developments like this. Forget daily charts or weekly. Just cover the name of the chart and do it. Throw different types on it. That's how you learn what I'm talking about. You have that same exact situation going on in crude. It is stuck very much in that band going sideways. Momentum is still up. The trend is up. Resistance around 52.70 in this market. In the nat gas, look at how the Bollinger Bands have narrowed. You're not trending anymore. You're just dropping in and out, and it's a frustrating trade for traders when that happens. The market's looking to see what does it do next. That's what you're waiting on. So I put that together, and I write about it for you. I also teach you little techniques for intraday. Example, these are called pivot points. And what they are is there's a formula that creates what we call a center point in the white line, a resistance point above the market, a resistance point above the first one. Then you have a support line and a second support line. And what traders try to do with these is they are trying to get short at the first resistance, buy the market back at the center line, buy the first support, trying to come out back up here. We teach how the formula is done. We show you the technique, and I do it in a series of videos. One of the videos, what it does is the video itself is going to take you and teach you with animation how it works. In that video, like here, it's going to show you the formula, and the formula is universal. And there are different ways you can create pivot points. Do you want 2 buys, 2 sells? Do you want 3? Forex traders might want more than that. There's different techniques to it. I'm going to be adding momentum to this in the next series of them. But we show you how to apply it on your chart, and we show you what it's about, because it's an aggressive in and out trading tool. I don't view it as a position tool. It's an in and out tool. If you'd like to get both videos and learn about it, just call us. You can go to our website over the weekend. You'll see our carousel of free offers. Pivot points will be one of them. You can come up here as well. You can click on pivot points. And I'm saying if you're watching me on YouTube, you'll see an icon. It'll open up the form. And underneath us on many websites says, click here for Ira's free information. Do it. Why not take advantage? 2 of these. Now you'll say, do I have the charting software for it? We'll make that available if you haven't tried our charting software for free as well. I'm Ira Epstein. You have a great day, and I'll talk to you all Monday.